Good afternoon, ladies and gentlemen. Thank you for joining us for this event. As you can see, we are about to get started, so I would like you to please find a seat, and we should get started shortly. Thank you. All right. Welcome to the NGX. We'll get started shortly, but as usual, as is the custom at the NGX, we'd like to play a short safety video for your information. So please turn your attention to the screens.
Ladies and gentlemen, welcome to Nigerian Exchange Group Event Center. At Nigerian Exchange Group, your comfort and safety is our priority. As part of our health and safety policy, please listen to the following announcements. For your convenience, the restrooms are located to your right, just outside the door of this event hall. In the unlikely event of an emergency, 2 exits have been provided for your use. A stairway that you can access from the lift lobby just before you enter the event center. Another emergency exit is located right behind the stage's backdrop. The door can be opened by pushing the handle. Please do not use the elevators during an emergency. Rather, locate the nearest exit from where you are sitting in a calm and orderly fashion. Emergency responders will also be available to provide additional instructions as required. Please switch off your cell phones or activate the silent function so we don't interrupt the proceedings here today. Once again, welcome, and do enjoy your stay at Nigerian Exchange Group. Emergency responders will also be available to provide additional instructions as required.
Cell phones are in the silent mode. We'll appreciate that very much. Once again, I want to say welcome to everyone. We also welcome our audience joining us virtually. We welcome all our traders. We hope it has been a profitable trading day. We welcome all our regulators, investors, institutional, retail. Everyone is all welcome to this Facts Behind the Offer presentation by the FCMB group. My name is Wale Famarewa. My job essentially is to be directing the program today. And I'll be getting out of your way in a moment to invite our first speaker to deliver a welcome address. But before that, I just want to dispense with some very important greetings as I recognize those who we have on the high table and, of course, some other people that are here on the floor. I want to begin with the CEO of NGX, Mr. Jude Chiemeka. Round of applause for him. I'll try and run very quickly because we want to get you out of there very, very, very quickly as well. We have the CEO of NGX Regulation, Mr. Olufemi Shobanjo. We have Mr. Tony Ibeziako, who is the head primary markets, NGX. And of course, we have the most senior doyen of the market, Alhaji Rashid Yusuf, joining us. From the FCM Group team, we have leading the Group Chief Executive Officer, Mr. Ladi Balogun. We have Mr. Femi Badeji, Executive Director, Coverage and Investment Banking. We have Mr. Gbolan Joshua, Executive Director and Group Chief Operating Officer. And as we move on, we would like to also recognize Mr. Azubuike Opalakwa. My apologies, sir. Director at the NGX. We also have Mr. Adeyinka Shonekon, Executive Director, CSCS. We have Mr. Sam Onukwe, Chairman, Ashon. And we also have Mr. Sam Ndata, a doyen of the market, also joining us today. We have Mr. Abimbola Babalola, Head Trading and Products, NGX. You're all very welcome. And also part of the FCMB group team, we have Mrs. Felicia Obozua, Executive Director, FCMB. We have Mr. Chukuma Nwaze, Managing Director, Credit Direct Finance Company. Is he here? We have Mr. James Ibori, Managing Director, FCMB Asset Management. Ilori, my apologies. Definitely not Ibori. Definitely not Ibori. It's Ilori. Yes, thank you for that. Mr. Christopher Bajowa, Managing Director, FCMB Pensions. We have Mr. Lai Olaleru, Executive Director, CSL Stockbrokers. Mr. Ekechukwu Omerua, Managing Director, FCMB Capital Markets. We have Mr. Oyetunde Fadele, Deputy Managing Director, FCMB Capital Markets. And we have Mrs. Rita Monero, Managing Director, FCMB Trustees. We also have Mr. Obaro Odege, Executive Director, FCMB, and Mrs. Toyin Olaiya, Executive Director, FCMB. You're all very welcome. We'll be getting to the presentations in a moment. We'll be happy to take your questions. We were here just about a year ago, and we're back here as actually planned, and I'm sure the Group CEO in his presentation will allude to that as well. But on that note, I would like to now invite to deliver a welcome address the Chief Executive Officer of NGX. Please welcome Mr. Jude Chiemeka.
Thank you, Wale. Didoyen, distinguished ladies and gentlemen, good afternoon. Let me, on behalf of the board and management of the Nigerian Exchange Limited, welcome you to this Facts Behind the Figure offer of FCMB Group. At the NGX, we remain committed to promoting transparency and fostering continuous engagement between issuers, investors, and other market stakeholders. The Facts Behind the Offer platform provides an avenue for issuers to engage directly with the market, articulate their strategic objectives, and build investor confidence. We commend FCMB Group for leveraging this platform to communicate its value proposition and long-term growth strategy. Since its listing on the NGX main board in June 2013, FCMB has demonstrated resilience, innovation, and sound corporate governance. The financial services sector remains a key pillar of the Nigerian economy. Clearly, this is a key sector, not just for the economy, but also for the NGX. They contribute over 75% of trading activities that happens on our floor on a daily basis. And in the last 4 years, they've traded close to 7.6 trillion naira worth of securities. The interesting thing is that they also continue to generate revenues, not just for investors, but also for the federal government, as they have paid 2.2 trillion in taxes, and they've paid over 67 billion naira as dividend to investors. But beyond these figures, this sector has been a very key channel for diaspora participation and remittance inflows, providing sustainable sources of foreign exchange and reinforcing investor confidence in Nigeria's capital market. These outcomes affirm the sector's vital role in capital formation, economic stability, and national development. The ongoing recapitalization exercise has further demonstrated the depth and efficiency of the Nigerian capital market. Through innovations like the NGS Invest, our digital offering platform, banks have collectively raised over 1.8 trillion naira since the commencement of the recapitalization drive. This platform has simplified the capital raising process, enhanced transparency, and expanded retail participation in capital raising activities. Overall, the exchange has facilitated 4.6 trillion in capital raised across multiple asset classes in the first half of 2025, underscoring its growing role as a key driver of economic transformation. At the exchange, we also continue to advance sustainability and deepen ESG integration across our markets in partnership with International Finance Corporation, NGX is expanding the issuance of labeled instruments such as green bonds, social bonds, and marine bonds to support the real sector and accelerate Nigeria's broader sustainable finance objectives. Additionally, through our X Academy, and I believe Ugochi is here, who heads our X Academy, we have enhanced investor education, and this also helps to promote financial literacy to strengthen the confidence and participation of various investors across our market. And I also like to just say that FCMB should try and leverage more of our X Academy, even as we are focused on ensuring that the corporate governance, which clearly all our stakeholders or our listed corporates a bit, continues to be on the best-in-class emerging trends. Once again, I commend FCMB for this bold step to come to address the market. Just like the moderator said, they were here last year, and clearly the need to address the market is born out of this fresh offer. And I believe that the sort of investor engagement that they have, the innovation, the creativity of the enterprise, you'll better do yourself a favor by participating in this offer. The last piece is just to thank my colleagues, especially my colleagues in the primary markets, my colleagues in the corporate communications space who have made these events seamless, and I believe that you will have an enjoyable stay at the exchange. So do try and engage and ask all the questions that you need to ask. I'm sure FCMB is here and they'll be able to provide all the required answers to your questions. Thank you so much for coming.
Thank you very much, Mr. Chiamaka, for that. And again, thank you all for being here. We know that you could be doing many other things after a very busy trading session, especially our brokers. Really appreciate you. Thank you so much. All right, so as he mentioned, we are here to give you information about the facts behind the offer and, of course, to take your questions. So we'll get right into that now as I invite the group CEO of the FCMB Group to deliver his presentation. Please welcome him to the stage, Mr. Aladi Balogun.
I don't know if I should say Your Excellencies with James Ibori being here with us today. You've lost a bit of weight, so I'm very happy for Your Excellency. Distinguished ladies and gentlemen, my colleagues on the board and management of FCMB Group, members of the press, it's a pleasure to be here again with you, as planned, as said, to discuss the public offer which has now launched. I believe it's been just slightly over a week that we've been open in the market. I believe there's a presentation. I just want to ask, how am I to get this to work? What do I need to do? Sorry? It's coming up shortly. Okay. In the meantime, I can use this to adjust my tie. Thank you. So welcome behind this public offer of FCMB, in which we are raising 16 billion shares at 10 naira per share, total of 160 billion naira. It is a very important transaction for us because it is the commencement of the final stage of our recapitalization effort that will ensure the retention of our international license. And with that international license retention, you will also see a very different FCMB group evolving over the next few years. I will tell you a little bit about that evolution that you should be expecting of the group, which I think will only lead to far more significant shareholder value creation. But I must acknowledge the importance of the NGX to the story of FCMB. Apart from the fact that we received our birthing or creation as a result of the indigenization exercise when many companies came to the market to list, and CSL, our forebear, was responsible for the listing of many of the largest customers at that time. Beyond that in itself, I did a calculation that just in dollar terms, if I include this offer, the NGX has been responsible for helping FCMB Group accumulate over $863 million of capital raised on this exchange since our foundation. And I think that deserves a big round of applause. I think what's most heartening for us is the fact that the last two raises, both last year and this year, we're seeing that a lot of that capital is being accumulated domestically, which I think is essential for the development of the exchange, because as we know, international capital can be very flighty. It can come and leave, at a moment's notice. And I think it's also a very, very important time for us to be raising money because the country is seeing the first signs of a sustainable economic recovery, which we've all thought was possible, and the belief and the potential now that actually the Nigerian economy can start to fulfill some of the promise. They say that banking is a leveraged play on an economy, and with the signs that we're seeing in the economy now, I would say that we should, if things continue, see bank stocks perform extremely well. And the first slide that I have here just basically talks through some of the strengthening signs that we're seeing of the Nigerian economy. Starting with the macroeconomic indicators. We're seeing that foreign reserves are growing. They're now at a 10-year high. We're seeing inflation is declining. It's come down from about 34 to 20%, and we expect, most analysts are projecting that it will break 20% by the end of the year and come down to the teens, which we haven't seen for many, many years. The currency is stabilizing, has actually been appreciating. A number of analysts think there is more appreciation to come, and that is stimulating a huge amount of foreign investor interest. Initially, obviously, it's coming into the fixed income markets because there you can get very high yields. But as interest rates comes down in the fixed income markets, it will definitely come into the stock market. We expect that Nigeria will be very soon, if things continue in this direction, will be readmitted into the various emerging market and frontier market indexes, and that will bring significant money into the market. It will bring a re-rating of the stock market, and you probably see price-earnings ratios rise significantly. And we're seeing not just a growth in foreign direct investment, foreign portfolio investment, but also foreign direct investment. The liberalization of the remittance market, we're also seeing growth in remittances, and we're seeing oil revenues grow and oil production grow, where today we're now moving, I think, above about 1.7 million barrels a day. The government is targeting over 2 million barrels a day. And so all these things are pointing to a much more stable economy, an economy where you will expect that corporate earnings and the overall economy and GDP will improve. As we know, GDP is now above 4%. Will it stay there? I think the projections are that it should, and it may even potentially increase. So for the first time in a very long time, the economy is growing faster than this economy needs to be growing potentially at about 7%, 7% a year. Now, if we look at what's causing a lot of this, we must give credit to the central currency reform with the floating of the exchange rate, the removal of the gap between the parallel and the official market, the reduced intervention we're seeing from central bank now. The money is coming in, and what is that doing? That is helping to raise our reserves. And of course, we've seen the clearing of the FX backlog of about $7 billion that always sort of hung as a cloud in terms of how really strong are our reserves. And this has all created a very positive investment outlook. We've seen that the interest rate between US government treasuries and Nigerian bonds, the spread is shrinking. That's likely to lead to a refinancing of government debt. It will mean that the cost of government borrowing will go down. We're also seeing the rating of the country, the credit rating of the country improve. The banking sector, I think, is beginning to show some very, very positive signs. In our view, the recapitalization exercise is extremely positive. Yes, a lot of capital is being raised. However, and my advice is anyone who already holds a position, to avoid getting diluted, it's very important that you do continue to invest. To those that don't yet hold the position, be it in FCMB or underweight banks, I'm pretty sure there's no one in here that doesn't have, stocks in banks. I think the banking sector is going to do extremely well in this kind of environment. And with the recapitalization, I'll just give you one example in the case of FCMB, why recapitalization is so positive to the performance of the bank. Today, interest rates if you look at our sort of marginal cost of funds, we take money at about 17 to 20%, but let's use 17 as the lower level that we take money. If I take fixed deposits at 17%, I have to put 50% of that money into cash reserve at zero interest rate. It's come down to 45 for private sector, 75 for public sector, but if you average it out, it's still coming out at about 50% is our cash reserve requirement. So if I take ₦1 billion today of deposits from a PFA or others, 500 million naira of that on average goes back at zero interest rate. It means that if I borrowed that billion at 17%, the 15% that I can use, the 50% that I can use, I'm actually paying 34% interest rate on if I've borrowed at 17, because half of it is zero. So my effective cost of funds is 34% on that ₦1 billion. When I raise equity, like this equity that I'm raising, that 160 billion will first of all go down to pay down on my fixed deposits, which means the immediate return I'm getting on that money is 34%. This is what we saw happened last year when we raised money. The money came in December 31st on the last day of the year, but once it came in during Q1, we gradually paid down our expensive deposits. So that's why by Q2, you saw our net interest margins rise to about 9%. You saw our ROE come to like early 20-something%, such that half-year ROE was already at 20%. All other things being equal, we expect by Q3 the ROE will rise even further, right? And so same thing will happen with this capital we're raising. We raise this money. We'll finish on November the 6th. We'll move fast to do a rapid capital verification. We expect by very early Q1, those funds will be in our balance sheet. We will pay down fixed deposits, and we expect, assuming interest rates are close to these sort of levels, because we recognize the government needs to keep monetary policy quite tight to make sure that the exchange rate stays strong. We expect that this money we're raising will be delivering about 30% incremental return for the business, for that money. So capitalization is generally a very good thing for the industry. It's better for banks like ourselves, maybe that had a higher proportion of funds in fixed deposits, so that we get that benefit. Whereas if most of your money was already coming from current and savings accounts, the benefit of the capital is less. So it is very positive for FCMB. And, all this we expect will ultimately reflect in the earnings going forward, and as I talk you through the presentation. So everything is pointing to the fact that the environment we're in is probably one of the best we've seen. Certainly, I would say, I don't want to mention names of presidents and past administrations, but a good few administrations you'd have to go back before you've seen the kind of performance that we're likely to see in the banking sector. And I think it's a time for me, definitely on a personal level, to be accumulating very heavily, in the banking industry. And probably for people like myself, the first time that I'm actually moving money from, in the last year and a half, from hard currency into Naira to invest heavily, in the Nigerian stock market. And I think that is an indication of things that we've not seen in a very long time. I think one of the charts here also very important to look at is the performance of the FCMB stock and the index as a whole, which is the bottom chart there, has been on the ascendancy. And we've seen that FCMB has seen 395% growth. Sorry, my eyesight is a little not as fantastic. Since, I think, 2020, I think that is, right, which gives you a compound annual growth rate, if my maths is correct, of around 70% over that period. But what is also very important, again, shown in one of the graphs here, the one on the bottom right hand, some of you may not be able to see this, is that on a price-to-book basis, FCMB is actually one of the cheaper stocks to invest in at this time. And if you look at the universe of banks, there are about 9 banks here. And in terms of price to book, we would be the 4th cheapest. So there's quite a lot of room for us to grow as the price to book moves closer to where some of the higher valued stocks are. What will drive this? Ultimately, it'll be steady growth in our return on equity. I think that'll be the most important thing. And what we'll see over the next year or so is how we achieve that. So I will move on to the next slide just to recap what you're investing in when you invest in FCMB. And I think one of the most important things is the diversification. The fact that what you invest in is really not just a diversified set of businesses, but an ecosystem that works together. So it's not just the fact that we have earnings or profits coming from different parts of the group. It's also that each part of those groups helps to make each other stronger. So when we look at the bank, for example, the bank benefits from the fact that we have a strong investment bank that is supporting our corporates, that brings us more banking business, be it as receiving bank to support those that we're doing issues for, or other things we may be doing. Similarly, our asset management, pensions, and wealth management businesses support our customers in the retail space and in the HNI space, but also invest in companies that are So we find that the asset management business and our pensions business invest in corporates that have sufficient ratings that are also customers of the bank. So in that sense, we have what is very much an ecosystem that is working together and makes us more resilient. What you're seeing in the structure today is that we're divided into 4 areas. And I should stress that the intent is that this will evolve over the next year based on certain businesses that we're incubating. We have a banking group, which is made up of the Nigerian bank, the UK bank, and a microfinance business. How is the banking group likely to evolve? I think over the next few years, we have plans of expanding into a new country every year over the next 5 years internationally. So we expect that the international footprint will be very different from what it is today, and it will create an additional platform of growth for the group. So the banking group is likely to have 4 to 5 more subsidiaries in it in the next 5 years. We have a consumer finance business. Again, this is evolving greatly, and that's Credit Direct, extremely successful business, delivering about 80% return on equity. We're actually selling somewhere between 15 to 20% of this business at a very, very healthy valuation to recapitalize the bank. And that sale will actually be accretive from an earnings point of view for the group, because that capital will now be the multiple we're hoping to sell at is sufficiently high that the 30% return on equity that we'll be getting on those funds will be better than the return we would have gotten if we've kept that capital, in Credit Direct. But Credit Direct has now gone fully digital, and it's now moving more towards something we call embedded finance or embedded lending, where it's embedding itself in the cash flows of a lot of our corporate and institutional customers and allowing them to offer credit to their own customers. So Credit Direct will move more towards a fintech umbrella of the group because it's fully digital native now. Most of the loans that it's doing is end-to-end digital, customers on board digitally. So it's no longer just a consumer finance business, and it's creating a new payments capability because it has to offer, well, it doesn't have to, but by offering payments, it can actually be able to do more lending. So the best example to think of is there's a Swedish company that just IPO'd in the US called Klarna, and they do buy now, pay later. But there are many forms of embedded lending. So it's basically moving in that direction of basically digital payments and lending. So it wouldn't be right just to call it consumer finance. In addition to that, it's also going into business lending, SME lending, right? So that business is evolving and will come under our fintech arm. Investment management stays very much as it is, but we intend to scale this business both organically and inorganically. Investment banking also very much stays as it is, but we'll see much stronger synergy with the bank. So we're going to put everything, whether you're commercial banking or investment banking, all will be under banking. We're incubating right now, and it's beginning to gain traction, a set of new fintech businesses in the cross-border payment space, as well as something we call banking as a service, which is an evolution of payments. This is under a brand called Rover, and this will be a separate standalone fintech division of the group. So what you will see next year is the group evolving basically into 3 verticals. Banking, that will have the Nigerian businesses and a few other international subsidiaries. Investment management, that will stay pretty much as is, but will be scaling both organically and inorganically. And then our fintech arm that will include Credit Direct and Rover. We're not there yet, but by next year, that is how we will be presenting ourselves to the market. And that's very much what investors will be investing in. Moving to the next slide, what the group represents today is a very resilient set of companies that are moving very steadily and assuredly towards leadership in their respective markets, and they're doing that largely through innovation. Credit Direct is the #1 non-bank lender in Nigeria, and it's also by some margin the most profitable. FCMB Capital Markets is now the #1 debt issuing house in Nigeria by the league tables, both for H1 2025 as well as for Q3, and it's sustaining that, likely to sustain it throughout the year. FCMB Pensions, by retirement savings accounts, is a top 5 PFA in the country. That excludes defined benefit schemes. But when you look at RSAs, that is what is growing faster. And in that, we have about a 7.28 market share. We are very well positioned for the ongoing consolidation in the pension industry, and we expect we'll continue to rise in that regard. The bank, FCMB, is ranked #7 by total assets, but one of the goals that we have is through digital transformation and innovation, as well as a number of the initiatives that we're taking on board to drive the productivity of the organization, is to move to being the most efficient player in the market, dropping our cost-income ratio, first of all, to the early 40s, and gradually moving below 40% over the next 3 years. And as we get to those sort of levels, you begin to see an ROE that is towards the top of the industry. Around 40% is the medium-term ROE target that we have for the group as a whole, largely because the bank in itself will be operating at those levels. So when we look at these businesses, right now, banking accounts for 82%, followed by consumer finance. We expect that this will moderate a little when you look at our future projections. We still think, because of the international expansion that we're doing, the banking will probably retain about 80%, but not all of that will be the Nigerian bank. We expect that Nigerian bank will probably come down to somewhere between about 70% or 60 to 70% of our banking profits in the longer term. Nigeria will always be important, and then international subsidiaries will become more important. As I mentioned earlier, there are additional platforms that we are deploying now to drive more in the fintech space, both in cross-border payments and banking as a service through the Rover brand name. So that's the structure. What have we seen so far this year? The highlights of the results that we released at H1 2025 saw the beginnings of the impact of the capital that we've raised last year. By all indications, we expect that H2 will be stronger on an operating basis, and stronger for a couple of reasons. Number one is that we're driving a lot of efficiency. So you're seeing cost-income ratio come down. Technology that we're deploying, and I'll talk a bit about that in a subsequent slide, is beginning to have a significant impact. Number two, we're putting a lot more resources in our wholesale banking side of the business, corporate and institutional banking, and also treasury and financial markets. And those are businesses that have a very low cost-income ratio. So we expect with these things, profitability will significantly improve. On the non-banking side, Credit Direct is also seeing a very strong H2, and we expect that, therefore, the profits year on year of that business will grow by over 100%. And then on the asset management side, our pensions and FCMB asset management are also having a very, very good year. Asset management today for us is actually growing faster than pensions. And I think we expect in the next few years that profit-wise, it will be as big, if not bigger, than the pensions business. And there's quite a lot that's happening there. But if we look at what we had achieved in H1, just a few highlights that I'll point out. Year on year, we saw 23% growth in earnings. ROE has risen from 12.8 in 24 to 20.6 as at H1, but that's partly because Q1 actually was quite slow, and Q2 has picked up, so expect it's going to move even more significantly. Net interest margins has come up by about 44% to 9.1, and all of this is sustainable. I think one very key difference this year is that we don't see much by way of foreign exchange gains. In fact, we've seen foreign exchange losses because the Naira has appreciated, and we have, a net asset position of our balance sheet that is in dollars that is positive to the tune of about $150 million. But the earnings growth that we've been seeing has far outstripped that, and we expect that H2 will be significantly stronger. Similarly, we've seen EPS on an annualized basis come up 51% year on year. So if we look at what should we expect based on the projections, and I'd say that we're trending right now in Q3 ahead of these projections that we've shared with the market. And if we just take a look from 2022, we'll be seeing PBT deliver a 72% compound annual growth rate as a whole. But this is not just restricted to banking. Our non-bank subsidiaries over the last 3 years would have delivered 61% compound annual growth rate per annum. Return on equity as at half year is at 20.6. We think at a full year it'll be materially higher than that. And the stock since 2022 has delivered about 55% compound annual growth rate and about 70% since 2020. This also is coming from not just the diversification, but also the margin expansion that we're seeing. And as mentioned earlier, net interest margins is up at 9.1%. So something that I wanted to just spend, a short time on is the purpose of why FCMB Group exists. Because it's all well and good, making profit, but ultimately if that profit is not being used to do something good, at the end of the day, it may not be sustainable. And oftentimes people say banks make a lot of money, but they don't lend. But FCMB is quite different in this regard. We pride ourselves in being an institution that is really focused on growing this economy, which is why we have a purpose of to foster inclusive and sustainable growth in the communities we serve. We do this through financial inclusion, where we have not just Credit Direct that does micro lending, but also agency banking. And if we look at our activities in that space, our loan book is about 118 billion naira today, and it's grown by about 22%. And we've seen revenue grow by about 72% in micro lending. Similarly, agency banking has grown by about 23%, revenue about 17%. Similarly, we also promote sustainable economic development. SMEs are the engine of growth in this country. We're very active in lending to SMEs. Our SME loan book is about 509 billion naira. It's grown 20% year on year, and the revenues have grown 49%. Agriculture is also extremely important to the economy. There, the loan book is about 264 billion naira. It's grown about 66% year on year, and revenues have grown about 45%. We feel that as a financial institution, and particularly one that has international presence in markets like the UK, playing our role in helping to support the currency is key. So we're very active in helping to finance and drive non-oil exports. We've been actively growing this side of the business. We've seen 190% growth to about 47.9 billion naira loans in the non-oil export space, and that is growing. And in addition to that, we've also seen revenue grow substantially by about 428%. On the remittances side, we've seen about 105 million naira growth in revenues. 105 million naira revenues, and we're seeing about 13% year-on-year growth there. Women empowerment. We've seen that women entrepreneurs are very good quality borrowers. We're growing what we do, lending through a vehicle that we call She Ventures, which is an initiative where we give favorably termed priced loans to female entrepreneurs. That book is about 38.7 billion naira, growing about 27%, and we've seen about 242% growth. Finally, renewable energy, which is proving to be cheaper than fossil fuel energy in Nigeria. We did see a drop in lending there, but we have plans to scale that again. But in terms of revenue, we've seen about 18% year-on-year growth. So overall, when we look at some of these areas of that really speak very clearly to the purpose of the institution, we've seen about 150 billion naira of revenue in H1, directly linked to our purpose, which is about 62% growth from where we are last year. Now, in addition to that, year to date, we have received international DFI funding because development finance institutions recognize the fact that FCMB is helping to do things that speak to their own specific mandate. We've seen about $276 million of funding coming in from international DFIs, helping to reduce our dollar cost of funds, meaning we don't have to go out into the Eurobond markets to raise money. And similarly, for domestic DFIs, we've seen about 126 billion naira. And as you know, with this government, domestic DFIs are getting a lot of attention. Bank of Agriculture has just been recapitalized, Development Bank of Nigeria, there's a credit corporation that is driving consumer credit, and of course, there's the long-standing Bank of Industry. And all of these are critical partners to FCMB. And they actually help us increase the funding that we're able to give to SMEs. Now, why did I want to spend some time on this point? There's a couple of reasons. Number one is that you could say, well, yes, there's a discount to buying FCMB shares on the secondary market, in the public offer, but it may not be big enough. Maybe I should just buy, in the secondary market. However, I would say that there's a big difference. Buying in the secondary market ultimately is different shareholders exchanging money between themselves. Buying in the primary market is important to our own purpose and our own mission, because this money that you're giving us is really helping to grow the Nigerian economy. And that's why I would say there's a difference between buying in the secondary market versus buying in the primary market. And I think we all want to see this economy grow, and there's probably no better place to do that. I see some people are chuckling. but it's true. There's no better place if you really want your money to work for the Nigerian economy than putting that money in the FCMB offer at this time. So, if I move on, and just another area that I want to spend a little bit of time talking about is our efficiency drive. We as an institution can see very clearly that if we sustain this efficiency drive that we're on, that we will hit a return on equity comfortably north of 30% by 2027. And there are a few things that we're doing to drive this. The first is the net interest margin expansion that I've talked about. Low-cost deposits are growing fast through payment solutions and digital. Capital is coming in, as I mentioned, if I take the public offer plus the minority sales that we're doing, we're seeing about 230-something billion naira, almost 240 billion naira of capital will come in between where we are today and the end of Q1 next year. And again, all that'll do is it'll boost our net interest margin. It will also help improve our cost-income ratio because that 30% annualized that we're generating on that 240 billion, plus or minus, which is about 72 billion naira, is not coming with a penny of additional expense to us, right? So you will see a cost-income ratio decline as a result of this money coming in. But I think one of the things that excites me most about what we're doing is how we're using technology to drive down our cost-income ratio. We don't make a lot of noise about it, but one thing that FCMB has been doing over the last couple of years is building its own in-house engineering capabilities and its own in-house technical product capabilities. Why is this important? If you want to be a disruptor when it comes to technology, you can't use technology that is sold to you by vendors. Why? Because the technology that a vendor sells to you is used by every other player. So the only way you can differentiate your technology yourself through technological innovation is to learn how to build things that are solving problems that others are not solving, or build things that are making you keep up with the most innovative, banks, or let me just say banks, although non-banks as well, in terms of some of our other subsidiaries in the market. One of the most important things that is happening in FCMB are the modifications we've made to the FCMB app. So I won't mention the name of the institution, but there's one fintech that has been a bit of a thorn in the side of Nigerian banks in the last few years, I'll say since COVID. And one of the benefits that they offer is that you can open an account very quickly on the app, with very little stress. We took time to work on our own app, and we checked they take 14 steps for you to open an account. In our own case today, if any of you, which I doubt there'll be anyone in here who doesn't, but if you don't have an FCMB account, go to the app, open an account, and it now takes 8 steps to open an account on the FCMB app. Why is this significant? Thank you. Why is this significant? As of 2 weeks ago, when I last checked with our executive director sitting in the front row here, we haven't even started marketing this capability. We're opening 4,800 new accounts a day as a result of this. I believe by the time we start marketing, that number will probably double. So if you just do the math, 4,800 a day, 365 days in a year, I'm sure somebody will work it out for me, but plus or minus is about 1.5 million plus accounts that we're opening in a year pre-marketing. And so we are seeing basically a very significant increase that will be happening in the number of customers that are banking digitally with FCMB, the number of customers that are doing payments through FCMB, the number of customers that are able to borrow with our retail products through FCMB, and all of that is happening while the cost of servicing them will involve zero human engagement unless they have a problem that they need to solve. Now, unless they have a problem they need to solve for now, because in addition to that, we're one of the first banks that has actually deployed a fully generative AI-driven contact center with a chatbot that today is handling 70% of all customer inquiries on the channels that we're using it for. We started with the web. I believe we're now moving to WhatsApp, and we also now have it on the app. So these 70% of the inquiries are being resolved by the chatbot without having to involve a human. This is important because it's not only going to improve our quality of service, making the speed of resolution and the availability of contact center resources 24/7 and the speed better, but it's also going to bring down the cost. It is why we are confident that we are now on a very clear trajectory to bring down our cost-income ratio quite substantially over the next few years. Now, what we're seeing also in the stock of FCMB over the last few years, going back 2019, is from an earnings per share and a dividends per share perspective, very steady growth. But I think we're only just at the beginning of what is a very significant growth. And that beginning, I'm saying, if you think this was achieved during some of the worst economic times in Nigeria, right? And I think it's important to note that. And this was achieved at a time where even our own technology capabilities were nothing compared to what we have today. And this was also achieved when FCMB was only present in Nigeria and a small presence in the UK. If you think what is going to happen over the next 5 years, by God's grace, a better economy. Secondly, far stronger technology. Thirdly, presence in more markets, where we've seen, almost without exception, that if you run the subsidiaries well, 4 or 5 years from now, there is absolutely almost no institution that is generating less than 30% of banking earnings coming from outside Nigeria. And we're just beginning on that journey. So for us, what we've achieved so far, I think will pale into insignificance for what you're likely to see in the, in the next few years. So, Okay, so that really brings me to the end of what I will call presentation, or this stage of the presentation. And what I'd like to do is just recap for you why I do think that this public offer is a very good investment for all those in this room and all those you represent as those who are your clients. Number one, the macroeconomic environment and the industry are in a very interesting place at this time. Ultimately, no one can predict the future, but I would say that we probably haven't had so many things pointing in the right direction of capital appreciation, and capital appreciation that will beat inflation, most importantly, as we are doing, many, many years. I think in addition to that, you're also seeing that FCMB from a valuation perspective is relatively cheap. So if you're going to make a play on banks, I think that the upside potential, even if you ignore some of the things that I've talked about, suggests that FCMB is one of those that you should definitely stack up on in your portfolio. The interest margins are strong, they're defensible, and they're likely to grow. With cost of funds coming down for us generally, not just from this capital, but also from the fact that we're growing our low-cost deposits fairly fast, but also with the fact that we're one of the leading lenders in SME and retail lending, where we achieve an average yield of about, between the two, somewhere in the region of about 40%, right? So again, that helps sustain our net interest margins. Our digital transformation will help further drive down net interest margins, also help reduce costs for the reasons I've given. And the fact that we're diversified means that we're not only going to be reliant on banking, and you're investing in a diversified institution. And finally, just to recap, the price to book at which we're trading makes us relatively cheap. For these reasons, I would wholeheartedly endorse investing at this time in the FCMB offer, and I will strongly encourage you to do so for your clients. Thank you very much. I don't believe there's a need for me to go through the details of the offer. I think everybody knows them, but I'll leave them on the board or on the screen. The terms are as stated there, and I mentioned at the beginning, 160 billion naira we're raising, 10 naira per share, 16 billion shares that have been issued, and the offer closes by the 6th of November. Thank you very much.
Thank you very much, Aladi, for that comprehensive overview of the facts behind the offer. So I hope that you have been very, very well informed. But now we want to give you the opportunity to also pose your questions. So if you do have any questions in the room, we want to encourage you to please raise your hands. And we'd like to do this efficiently because we want to get everyone out of here as quickly as possible. But at the same time, we want to take your questions. So please just raise up your hands, introduce yourself, and let us know who you're directing the question to. Try and keep your questions very concise. We'll appreciate that very much. So the floor is open now to take questions. Please feel free to indicate if you have a question. At this time, Ladi, it seems your presentation was excellent. There was no need to take any questions. But I guess people are thinking about it a little bit. Okay, so we'll leave a little more room if you are here and you have some questions. Okay, I have a hand at the back. Do we have a roaming mic? Thank you very much. Please introduce yourself and let's know who you're asking the question.
Good afternoon, everyone. So I report for DAR Communication PLC, owners of AIT Repa and FAR GFM. So wonderful presentation, Chief, Group
I'm
Chief
sorry,
CEO.
can we get your name?
Yeah, Amarachi.
Amarachi, thank you.
I report for DAR Communications PLC, owners of AIT Repa and FAR GFM.
Yes, please go ahead.
Yes. So I said wonderful presentation, Group Chief Executive, FCMB. But listen, so I have a few questions. I was doing a little jotting while you were speaking. So the first one is, beyond the CBN directive, how does this capital raise fit into FCMB's long-term growth and investment strategy? That's one. So the second one is, what specific areas or sectors will the new funds be directed towards? I don't think I heard that in your presentation, or maybe I missed it. And then the third one would be, how would the additional capital strengthen FCMB's balance sheet and support the future lending?
Okay.
I don't know if you got that.
Yes,
Okay.
We got that. Thank you.
Some very good questions, and thank you for raising.
Could you please? Yeah.
It's okay. Sorry. Yeah. So thank you for raising those questions, and maybe I wasn't as clear in my presentation on some of them that I tried to answer, but maybe some of them that I didn't even really touch on. So the first is, beyond the CBN's directive, how does this capital raise impact our future growth and strategy? So the first thing I would say is that it's only about 40 billion of the money that we're raising that we're using to support international expansion in the immediate term. We still have room from our existing capital of doing about another 30 billion or so of our existing capital to support international expansion based on the limits that CBN has set. So in actual fact, of the 160 billion naira that we're raising now, only about 40 billion of it will go towards international subsidiaries. But as I said, we will be opening new subsidiaries. Basically, the target is one a year over the next 5 years, and we're working hard to see how we make that a reality. But beyond the investment in subsidiaries, our capital adequacy ratio will rise, and it will allow us to continue driving our lending program. As I mentioned, for us, being an inclusive, fostering inclusive and sustainable growth is a core part of what we do. So our high yield retail and SME lending, where we generate about 40% return overall, some businesses are higher than that, other segments are lower than that, and other products are lower than that. We expect that will grow significantly over the next few years. So quite a bit of our capital will go towards supporting that. Then we expect that sectors like infrastructure will be key for Nigeria over the next few years. And we intend to play significantly in the infrastructure space. Of course, there's power, but equally importantly, there's transportation and others, and we would be continuing to play heavily in supporting the expansion of infrastructure in Nigeria. Then there are sectors like non-oil exports and exports generally, where we have a very strong structured export finance capability, both for hard currency lending, which happens in the oil sector, and local currency, to some extent, we do with the soft commodities that we export as a country. So we expect to see significant support to those sectors. So lending will be a big part of where this goes towards, because we will need more capital to support our capital adequacy ratio. And the third area will be human capacity. We're going to be investing heavily in making sure that we have the right human capacity to drive the very ambitious growth that we have. And last but not least is technology, which is key to the growth of the organization. And I believe that is what the use of proceeds sort of indicates in the offer documents. But those are the areas that we'll be putting this money towards. And how does that support our strategy? I think you will see a much more profitable, much more efficient, and much more impactful organization whose footprint will now go beyond this country and be able to bring the same impactful financial services to more countries on the continent, but always keeping Nigeria at the heart of what we're doing. The sectors that the funds will be directed, I've just indicated. And how will this strengthen our balance sheet? It will take our capital adequacy ratio well north of 20%, and we believe with the return on equity that we'll be delivering going forward, we will stay at those sort of levels, going forward. Ultimately, I think what that'll do is in the medium term, we expect that we will see an even higher risk rating than the already investment grade that we have. Thank you.
Thank you very much, Ladi. We have a question from a trader.
Okay. Thank you so much, sir, for your very detailed presentation. My name is Mark Atom. I work with Equity Capital Solution. Your competitors have made investors used to interim dividends. I didn't quite hear what your own policy on dividends are, and whether investors should look forward to getting interim dividends going forward. Thank you.
Thank you for that question. I know that question came up the last time as well, and I believe Bola was the one that picked that up. So
the question came up last year. So last year when we came here for the facts behind the offer, we said we would commence interim audits in 2026.
Interim dividends, you mean?
Interim, first you have to have interim audits, yeah? Okay. So half-year audits in 2026, and we'll also commence the payment of interim dividends in 2026. So we still stand by that, we still stick to that, and you should expect us to commence that in 2026. Thank you.
Thank you for clearing that up again. All right, do we have any other questions? So we can assume that this offer is sold. There's no need to discuss it again. So congratulations, Ladi. We have sold it out.
Thank you very much.
All right. So if we do not have any other questions, thank you again all for coming. I'd like to now hand over to the Doyen to deliver his closing vote of thanks remarks. Over to you, sir.
Thank you very much for a very detailed and informative presentation. We always admire the effort you put into any presentation you made to us. The last time you came, we really admire the detail of information you gave to us about your plan to access the market. This time around, you've given us more facts and more information about your program. And also, it's a detailed one. But like I said the other time, we have this platform, not just when we are presenting exercise like this. We have it on a regular basis. That we call facts behind the figure. And we encourage companies to come in and do that on a regular basis. Maybe every 3 months, every quarter, so that information will not be compressed into one major meeting. It can be spread because prices on the market are determined by the quality and the volume of information you give to brokers and the currency of those information. If you give them a timely information about your operation and your progress and the challenges you are having, then they will quickly reflect that on the market. If you also have that challenges, you give them opportunity to ask questions and then to rub minds with you, and they will also give you feedback. So it's a good opportunity for both yourself and the stockbroking community to rub minds together on a frequent basis so that we can then reflect development within your company on the pricing of your stock. We thank you and we congratulate you. When you came for your issue, we promise you that we shall stand and support you, and I think we have done that. We shall continue to do that, but continue to be close to us and continue to give us more information about your operation. And together, I'm sure we shall continue to progress forward. Thank you for coming. Thank you and welcome.
Thank you very much, Adoyan, for those remarks. And on that note, we want to say thank you to everyone for coming. Before we do leave, I'd just like those on the stage to stand up for a group photograph. And I have one more information for you. So while they take that photograph, I'll write back. So please, if we can all stand for the photograph.